going to go down 10% or 15%. No way. We are way out of balance. We're not going to have a little mild recession. This is a major economic contraction that's coming, and the real estate market and the mortgage market is right in the forefront. The Dow is losing value as we speak. It has been losing value for 7 years. If you adjust the Dow for the CPI, it would have to be at 14,000 right now, even if you take the government's numbers as accurate. If you figure the government CPI is understating inflation by 2 to 3% a year, which I think is conservative, the Dow would need to be at 16,000 right now to have the same purchasing power it had in 2000. The Dow right now is about a third below where it was in 2000 in terms of the euro. It's about 25% below where it was in 2000 in terms of the British pound or the Australian or Canadian dollar. The Dow is less than half of where it was in 2000 priced in gold. And if you want to price it in zinc or lead or nickel or copper or oil, it's even worse. So the Dow is losing value against just about anything else that you can own, and I think that's going to continue to be the case. Long-term interest rates eventually are going sky high. I don't know where they'll be next year, but eventually rates are going to Pluto. They're not just going to the moon, they're going to Pluto.
I think Peter's scenario would come true if an atomic bomb landed on either Los Angeles, Chicago, or New York. Now, if I think that happened, and that's not beyond the realm of possibility for sure, if that happened, this scenario would unfold. It would take that kind of an exogenous event. But when you are a $12 trillion economy, very, very productive, and the labor force doubling its productivity in the last years, the fact of the matter is the automobile plants throughout the world want to locate in America. Right now, out of Jackson, Mississippi, Infiniti built one of the biggest automobile plants in the world. Just out of San Antonio, Toyota is building one of the biggest automobile plants. Why? We're producing 1/3 of the world's wealth.
So, here's where we are. Car dealers can't sell any car.
Why? We're producing 1/3 of the world's wealth.
People cannot get credit. They're going to hold on to their car longer. Wheat, bubbling. Corn. Corn should be about $2 or $3 a bushel. Corn went to $8 a bushel. Steel went through the roof. Copper went through the roof. Commodities went through the roof. But then, when you really talk about the roof, you got to talk about housing.
That is why.
Right.
And the point about outsourcing, look, a comparative advantage says that if China can do some of the manufacturing, let them be. Don't tell me that China could do that without our banking and our technological skills when it comes to investment and so on. They rely totally on us.
Car dealers can't sell any cars. People cannot get credit. They're going to hold on to their car longer. Boy, have these last 25 years been sweet. And here's what happened. Bubbles everywhere. An energy bubble. Energy going to $140 a barrel.
Peter's very upset about $70 a barrel of oil, etc. $70 a barrel of oil brings in all kinds of alternatives. And so what he's saying is oil prices are now come down a little bit, but back up. I don't think so. As a matter of fact, I think they're going to continue to move down. Why? Again, that's how markets work.
You've got a bubble! And all those mortgages have gone toxic. Let's make sure that the Fed doesn't lower rates, which they've got them right down there right now. And I tell you, the minute they feel that the economy's coming around, they better raise those rates a bit. They better not leave them there. It just adds too much liquidity to the economy, and we'll have inflation like you have never seen. So hopefully the Fed can learn a lesson from a horrible mistake of keeping the federal funds rate too low, too long, creating that liquidity, creating those bubbles, creating this mortgage crisis, etc., etc.